market reaction, in particular oil prices, to all of this development. Of course, markets were closed largely in the weekend, so there was a lot of anticipation about how markets would open this morning. Let's snapshot on oil prices in particular. Clearly, they have responded. When oil futures opened late last night, it was about a 12% increase in oil prices. Then that pared back only 4 or 5% in the early hours of this morning. It's picking up again, so it's up 9.5% the oil price this morning. Of course, that's a very significant one-day move. It's worth noting that other assets perhaps aren't reacting as much as you might expect. Gold, of course, a safe haven trade is up, but only 2.4%. And equity markets perhaps could have reacted more as well. For example, in Japan, I think the market closed down 1.4%. The FTSE 100, which is now open, down 0.9%. Now that 10% or so oil price increase, very significant for a one-day move, but also worth noting how much it's moved so far this year. If we show you a chart of the oil price over the course of the last 12 months, you can see that year to date, since January, it's up some 26%, and a lot of that was in anticipation of potential Middle East conflict. So it is a significant move in and around all of the action of the last weekend. Just a point of note as well, oil prices last summer in the 12-day war against Iran spiked significantly. They pared back quite quickly, and of course that's because the war did not persist for that long, and that is one of the key factors to watch going on from here. Not just where the oil price gets to, but how long it rises. And of course, if you're talking about inflation here domestically, you require quite a persistence of elevated commodity prices, whereas the brief spike last summer didn't really factor in. Why is this all moving? Well, here's a chart of Iran's oil output. Left-hand side is the daily barrels per day in the blue bar chart, so about 3.5 million barrels per day. The yellow line and the right-hand side is the percentage, that is, of global supply. Not that much, only about 4%. And by the way, about 95% of that goes east to Asia, so it doesn't come to the West, albeit, of course, oil price, global commodity, it rises one place, it rises everywhere. So why is it having such an effect if it's only 4% of global supply? If we look at a map of the south of Iran, with the Straits of Hormuz, which you've probably heard mentioned a lot over the course of the weekend, marked on it, even if Iran only is representing 4% of global oil supplies, around 15 to 20% of global oil supply has to pass through the Strait of Hormuz every single day. And it doesn't take much conflict in the broader region to shut down commercial ships from wanting to travel through there. Of course, the bar for them to have to play safe is much lower than for military ships. And again, we come back to the question, not so much of the scale of conflict. We've already crossed the line for that being enough to shut down a lot of the travel through the Straits of Hormuz. It's the persistence from here. If we have weeks of the scale of conflict we have at the moment, then I think you'll see oil prices go a lot higher, and it start to affect global markets and other asset classes a lot more than it has done already, Sophie.